everyone. I hope the lunch was good. I'm visiting here from London. Thank you for the organizing committee to invite me. I'm an honorary fellow at University of Warwick. We have a great collaboration with University of Delaware, and I think the conference is going great. Most of my time is going into building a system called Palura. I think one of the participants was chatting briefly about it, but what we are trying to do is to selectively monetize and share data using verifiable computation. And we have a great use cases such as private AI, DeFi plus compliance all built up together. We can chat about that. A brief background about mine is I'm in DeFi since MakerDAO. I never went back after that. Love the demo sessions, more of a Discord kind of a guy I am now after my TradFi stint. But yeah, here is Pamela. And would you like to introduce yourself and start the presentation?
Yeah. All right. So yeah, I think everybody saw that FinTech demos were coming up and a couple of people scurried out of the room. Mine's not so much a demo. We don't really have a SaaS. We're not a product. We are very customized based on our customers. Nonetheless, I'm going to walk you through really how we typically work with FIs, FinTechs, crypto entities, a little bit less because this is a FinTech focused forum, but we'll walk through all of that. So I'm Pamela Clegg. I'm head of growth strategy at Inca Digital. Thank you. And happy to be here with you guys. I only have 15 minutes, so we're going to go really quick. And then also too, when I'm done, I'm going to run out the door and catch an Uber to the airport. But we have two lovely ladies over here from Inca. Look at them. It's like they're rehearsed. That's Kaylee and Leah. And they're amazing. They're going to be here. So if anybody has any questions, follow up. If you want to complain about how horrible this presentation was, they're welcome to take your comments. Okay. All right. So again, today we're going to focus primarily on how FIs are using Inca Digital, FIs, FinTechs. We work with pretty much every entity in the space, from layer zeros, layer ones, to crypto natives, beyond that to centralized exchanges, decentralized exchanges, regulators, banks, FinTechs, what am I saying, Gov, a lot of DOD, which is now Department of War. So across the industry writ large. And so that's why I say really and truly, it really depends on what our customers need and how they're going to use the data that we're providing them. As we've seen today, there's a lot of adoption, a lot of adaptation that everyone in the space is doing, and it is happening rather quickly. So with that comes new and emerging risk, right? As we speed up payments, as we speed up the flows, then we have additional risks that come into play. So really and truly what we are working on is enhancing those legacy supervisory tools that have been in place forever. And within that category, I'm going to include traditional blockchain analytics in that. Those are now becoming kind of more legacy tools in a lot of instances. So really applying additional intelligence to what is out there, and then how do we speed that up for our institutions and actually help them get to an answer quicker, help them get to that final intelligence quicker. Okay, so that's really what we do. So really looking at the ecosystem risk, as we've all seen, we no longer operate in a vacuum. So the industry itself is not siloed. We've heard so much today, I don't know how many times we said interoperability, right? Not just chain to chain, but also from system to system, right? So from fiat rails to on-chain activity and across the whole spectrum, what does that actually look like? So the legacy tools are still siloed, right? So if you walk into a financial institution, they have a transaction monitoring system. They have a fraud system. They have an onboarding system. And those tools don't really talk to each other. And then again, as I just said, those payments now are flowing across multiple environments, right? And so maybe they have a blockchain analytics tool, but that blockchain analytics tool doesn't talk to their transaction monitoring tool, right? So forcing those to communicate, as I said earlier with somebody, we jailbreak their transaction monitoring systems so that we can look at the flows across all of those payment systems, okay? And then also too, looking at, social media. I've been in banking. I've been in and out of banking, in and out of the crypto space, back and forth between the two. Banks historically do not use open source intelligence very effectively. okay? So really forcing them to use what is available to them. When you go back and look at Silicon Valley Bank, you look at the bank run, right? A lot of that was generated with social media. Okay, a lot of that fear stemmed from social media, a lot of the conversations that were taking place. You can see the same thing in the crypto space, right? When an exchange starts to have issues with withdrawals, that pops up on crypto Twitter, right? People start to talk about it. And then it starts to really shine a light on what's happening inside that exchange. So how do we get real-time notifications? How do we get historical trends? And that's some of what we provide as well. So looking here, this is just an example of negative sentiment changes, right, by entity. And so looking at how that sentiment changes over time for our financial institutions. Okay, this can be applied across the industry, right? We also do this for layer ones, or we'll do this for crypto exchanges. Okay, so there's so much information available out there. It's really how do we synthesize it all? How do we analyze it and provide that information to the institutions quicker? So yeah, expanding that perimeter. We've all seen something that happens, right? It's the butterfly effect. Something that happens over here actually does affect all of us. So if a stablecoin happens to depeg, we've seen how that affects everyone in the space. So something like that. How do we get early warning and actually get the forward-looking insight on that? And then contextualizing that at a firm level exposure. So when we work with a financial institution, it's not just the compliance or the risk teams that are ingesting the data or the finished intelligence, it's also the business units, right? Or building that into reputational risk or the operations teams that are using that information too. Okay, so again, changing risk landscape. There's a whole host of examples that we could pull, but I think number one, and we've seen this here, in addition to interoperability, I think we said 24/7 about 10 times today, right? Just in this morning. So how do we speed up the information that's coming in? Okay, so everything is moving faster, then also to our risk assessments and our risk intelligence has to move faster too. It has to come into the system faster. Okay, so getting those continuous signals is really important as well. We know the information's out there, right? We saw Ethan give us this amazing overview of what is available, right, on public blockchains, right? All that information that he can pull. How do we speed up that delivery? And I think the word he used was actually, how do we interpret that? Okay, so interpreting that oftentimes is the challenge, especially for TradFi. Okay, how do they interpret that and put that into action within their space? So we interpret for them. We speak all these various languages. Okay, we actually ingest Allianz data. We ingest what Ethan and his amazing team build and collect. Okay, but then we apply that into other metrics that we put into the system as well, and then we translate it for our customers, right? So again, using social media, it's super important. There's so much information available. A lot of times with on-chain monitoring, traditional blockchain intelligence, we can see maybe how it is that stablecoins are being used, like we saw with Ethan's presentation today, but we may not understand why. So why are they being used that way, right? Or with transaction monitoring tools, we can identify suspicious or illicit activity, but we might not understand why or what's driving that. Okay, that's oftentimes recorded somewhere. There are forums and chats and social media that is telling people some activity on the dark web that's telling somebody, hey, use this token or use this exchange, or this layer one is great for whatever type of illicit activity you want to do. Okay, so actually digging into and understanding what is coming down the pike can actually help prevent that risky activity from reaching your particular institution. Okay. This is an average sentiment over time. So again, looking at those behavioral and social signal, doing the analysis on the behavioral and social signals that are available, and then providing that. This would be something that we would provide quarterly, for example, to our customers so that they can actually see the sentiment trends over time. Again, this is particularly for banks. There are some bank names up here, but you can also apply this to layer ones. You can also apply this to crypto exchanges. You can apply this to centralized, decentralized, whatever it is. You can apply this to any entity, right, that has a presence. We all have a presence. We all have a digital footprint. Okay, so pulling in all of that sentiment and then applying an analysis to it so that we can actually look at the trend analysis over time. So again, a lot of this is, right, pulling information, blockchain data, right, but then adding in open source information, market intelligence, okay, adding in, things like imposter tokens. Where are the imposter contracts? So look at a stablecoin issuer. Okay, how many contracts are out there? How many imposter tokens are out there that are mimicking or attempting to mimic that particular stable token? Okay, and then not just delivering that information, but actually actioning the information. I'm kind of skipping through all the steps here, but collecting the information, analyzing, delivering finished intelligence, and then actually actioning on the back end on behalf of our customers. So we do this for a lot of customers. You may not have heard of us. We are kind of a little bit under the radar, but we're pretty vertically integrated. So like I said, we ingest Allium's data, then we may turn around and do this for Circle. We will actually do this for Alio, who is building infrastructure on which USDC is going to run, right? So layer one, then you have the actual entity itself, all the way to like a top tier bank like Goldman Sachs that's looking at how they interact with all this. And then they're looking at the counterparty. So we come in at like every level, right? We just maybe aren't the loudest in the space, but we ingest a lot of data and then finish it for our customers in a way that's very effective. Okay, so since this is supposed to be a demo, but we don't really have a SaaS, like I said, it really depends on our customers. I put together a couple of different ways that we deliver the intelligence. So you can see here, intelligence briefs and reports, we will pull together, think about counterparty risk. If you want to know, right, the counterparty, the risk profile of, say, Tether, we'll just go for the big dog, right, that's out there, the elephant in the room. Okay, you want to understand the counterparty risk of Tether. Say your institution is thinking of engaging with Tether or using USDT or holding reserves for USDT, right? There's a lot that goes into the risk profile of Tether, and it's not just its on-chain activity. As we saw earlier in the panel just before lunch, they were talking about, well, what about the reserves? How do we analyze the reserves? Those oftentimes aren't on-chain. Okay, so they're not available on-chain. So pulling in that information, pulling in the sentiment data, pulling in geotagging. Who are the holders of USDT? Where are they located? How are they using the token? What does wash trading look like with USDT? What other type of activity can we see? So some of that would come in via our risk or our briefs and reports. Then we would also bring some of that in with our risk intelligence dashboards. So something like, think Artemis, you're going to hear from Dune here after me. So Dune is going to be able to show you a lot more market intelligence on that, building in all of that information and looking at the overall risk of an entity, so the ecosystem risk. And then that can be delivered APIs, LLMs, whatever it is that our customer needs. And then the last thing that we do for institutions, this is what an overview kind of token dashboard would look like. And this is some of that's really important, the threat intel piece that is on there, which is geolocation analysis, scam token analysis, and so looking at the risk profile of a lot of those holders. Okay, so not just looking at the holders or the distribution, but what is the risk profile of those holders? So bringing in data from Allium that tells us, right, a little bit more about how that's being used, what those holders look like on chain. So the last thing I'll go over here is just real-time anomaly detection. So kind of going back to Silicon Valley Bank, we saw a run on the bank. Some of that was driven out of social media, fears that were kind of in the public, which if we hearkened it back to olden times would be like, a town crier going around yelling out, hey, they have liquidity risk, right? And somebody starts to perpetuate that. So when we look at real-time anomaly detection, it's pulling in, what is really happening out in social media, what's happening online right now, what's being said about a particular institution, and how can we get that out to our customers in as quick a manner as possible. So this is just an example of what some of those anomaly detections look like. It could be anything that would drive that, whether it's a liquidity issue, whether it's a reputational issue, whether it's an enforcement action. For example, when a bank receives an enforcement action, we definitely see an uptick of conversations or comments about that in social media. So providing this all to our customers in a real-time fashion so that they can make those decisions. So that's really it for Inca. I've managed to stay under my allotted time and I'll provide that. Thank you guys. It was a pleasure to be here and hear all the debate. It was great conversations. Thank you, Jalapa, for coordinating everything. And I'll hand it back over to Amit.
Thank you so much. Thank you. Great presentation. Actually, in the meantime, Stefano sets up his laptop. I want to just share very one important discussion. I think he will talk about it. There is a great discussion which is happening in Ethereum community. I was there in Cannes. I'm doing research and other protocol development with them. Ethereum community is trying to harden the protocol with privacy features in 2030. That means Ethereum will have a capability to go dark, no more. So it would be a public ledger, but private transactions enabled. It is a great topic of contention because there are two groups in Ethereum right now. There's always this is like a public good where people want to have hardening of a core protocol versus an app development over it. So yeah, debate is going on 2030. Let's see, Stefano has some interesting things.
Yeah, thank you, Amit. Yeah, sure. Hello, everyone. Nice to meet you. I'm Stefano. I'm a researcher at Nethermind, which is a company that works very closely to the Ethereum protocol, as Amit was mentioning. We have been implementing the core protocol almost since the beginning. And Nethermind is today helping institutions and enterprises to move on chain in a safest and more efficient way possible. Someone before in the panel was mentioning about making this technology usable for users, and this is one of our goals. We're working very closely on this important topic of privacy and compliance, and this is what we are going to talk today. And we leverage in Nethermind our deep research around important topics around cryptography, post-quantum security, and indeed privacy. Today, I want to talk about transparency on public blockchain and where is the advantage of this functionality and where is a challenge for institutions. So we really like blockchains in the way that they are decentralized protocols. They provide this new infrastructure for new ways for traditional finance to move on chain. And of course, the opportunity is huge. The problem here is that blockchain that provide transparency, they also exposes everything that is on published there to the world. So imagine you want to tokenize a bond, you want to tokenize security, then everything will be visible on the public blockchain. So you will see balance sheets, you will see transactions. When there is a DDP, you will see the counterparties, the amounts, and everything. And of course, this is unacceptable for financial institutions, as you can imagine. But at the same time, this is also a future because we have some regulatory requirements for financial assets that must be met. So in this case, transparency helps because we can monitor, we can follow the money, etc. The problem is that we would like to find the best of the two worlds. So we would like to have transparency and compliance and privacy as well. So the solution I'm going to present today is indeed not to use siloed environments, but to use public blockchains with all those advantages, but providing both compliance and privacy for traditional assets. We do have public blockchains, the standardization rails for tokenizing assets. Indeed, on Ethereum, we have something called standards, which is a way to implement assets in a standardized way via smart contracts. There is an important standard, which is ERC 3643, which provides all the functionalities of tokenized assets with compliance features. So we do have everything on chain, but it's public. So how do we make private? And this is what I'm going to show you today. We implemented a version of this token, but in a privacy preserving manner. And to do that, we use zero knowledge proofs. I don't want to bother you too much with words. I will show you a practical demo on how to work with it. But the problem, the idea, the intuition here is that we take a traditional token, we put it on a public blockchain, so everything is visible. And then we create a privacy-preserving version of it with these functionalities. So we will have on the privacy layer a confidential transaction moving assets from one user to another. We will have selective disclosure to monitor the flow and also compliance control, KYC, and clawback functionalities. You would see in a practical way, which is much better. So let's set the ground. The ground is a very basic example. Imagine you want to tokenize a bond. And we do implemented this component that provides the zero knowledge proofs for tokenizing the assets in a privacy preserving manner. And our component directly interact with the Ethereum public blockchain. There is no siloed environment, there is no layer 2, there is no middleware. Everything is living on a fully decentralized system. And we do have the traditional bond, so this guy here, which is implemented with the standard I was mentioning before. And then we do have the private version that can provide all the compliance and privacy preserving functionalities. So again, I don't want to bother you, so let's see a practical demo. All right, so this is our platform we implemented for this demo. And let's see, launch the demo. We are providing an interface where we have, imagine an online banking. And we do have a bank actor, investors, actors, and a regulator in this setting. So let's imagine that an issuer issued a bond for retail users, and the bank is in charge of distributing the bond. We do have a treasury on the bank side, so this is the dashboard of the bank, and the treasury is composed by a public version of the bond and a private version of the bond. And recall that we do have this everything on public Ethereum. Indeed, the token is 3643 implemented on the public version, and the private version is still on Ethereum. The bank also has access to a list of investors, and they can inspect the status of their KYC and the status of their account, because accounts can be frozen. So let's try to interact with the platform. Let's imagine that the bank wants to deliver some tokens to Alice, which is an investor that is registered on the platform, and they want to sell 1,000 tokens. So under the hood, we have a blockchain. So we settle the transfer, and we do actually have a transfer that happens on the blockchain. So here I'm showing you the explorer of the blockchain, just to showcase that we do have a demo bond here issued, and there has been a transfer. Indeed, if you look at the event, we actually can see on the public explorer that everyone has access to that there has been a transfer of 1,000 debt token to Alice wallet. Sorry. Okay, so let's try now the privacy preserving version of it. So now the bank wants to issue a privacy token, 1,000 units. Let's do it. And now it takes a bit longer because under the hood, we use a technology called zero knowledge proof that provides privacy to the transfer on chain. And this has been settled. So if we now open the Explorer and we want to inspect the event, we will see that the transfer of 1,000 token is completely obfuscated. And this data that you see here is encoded. And if you try to decode it, you will just see encrypted proofs and nothing else. It's a bit, okay. So this is the privacy version of the story. We have embedded the privacy token with additional functionalities, and the functionalities are the compliance functionalities. So the bank actually can decide to run some actions. For example, we can see that this guy here, Charlie, is not KYC'd. So if we want to transfer assets to Charlie, and we try to do that, for example, we impersonate Alice, and Alice wants to transfer 1,000 units to Charlie, which is not KYC'd, the system will fail because Charlie is not KYC'd. So you cannot actually interact with Charlie. And everything is privacy preserving. It means that if you observe the chain, you won't understand the chart is not KYC. So importantly, the banks can also interact with other compliance functionalities. For example, the bank can freeze Alice. And once this is happening, under the hood, we are generating a zero knowledge proof by freezing the account of Alice, and everything is privacy preserving. And now that Alice holds this balance, what we can do as a bank, we can claw back the assets from Alice from the balance back to the bank balance. Here we are doing a clawback. There is a zero knowledge proof going on, so there will be some time. And then once we settle it, we will remove the assets from the wallet of Alice. It might take longer because under the hood we are running some zero knowledge proofs, but should go well. In the meantime, I will show you. Okay, sorry about that. Yeah. All right. So the last feature I wanted to show you from the bank dashboard perspective is the regulator. So the regulator can actually inspect what's going on Alice wallet. And here, the important part is the selective disclosure. So the regulator has visibility of what's going on chain, and they can actually select the traffic from the Alice wallet, and they can decrypt the transactions that has been happened on the Alice wallet. And now the regulator has full access on the transfers. For example, here we have a transfer from the bank to Alice of 2,000 units of debt. But if we inspect the chain, and this is the interesting part, everything is encrypted again. So we don't have visibility from a user perspective by opening the blockchain explorer, but we do have visibility as a regulator on what's going on Alice wallet. We can do even further because the dashboard provides all the data. And in this case, this data here is exactly what's going on here. So the regulator can actually, they don't have to trust this platform. They can just download this data, do the encryption from themselves, and compare the value of what they see with the value that is on chain. And if they match, it's exactly what's going on the data perspective. So let's get back to the presentation. That was done. All right, so we showed you a concrete use case of tokenizing a bond on chain, on a public blockchain, and we added some privacy and compliance functionality to it, everything in zero knowledge proof. So we obtained transparency on 3643 assets by issuing private transactions using zero knowledge proofs. And we added compliance functionalities like selective disclosure, KYC verification, and freezing accounts, and everything on the public layer. So the real value here is that we are still using the blockchain in the pure sense. The public blockchain, in this case, we are using Ethereum, and we are tokenizing real assets while allowing financial institutions to be compliant with the regulation. I will stop here, my talk. Thank you very much.
Thanks, Stefano. I think we are nearly ready. Thanks, Stefano. Great presentation. We have Karim from Dune, very exciting name from one of our startup who does a lot of exciting thing in the data space. I've been a personal user since their first dashboard. So yeah.
Thank you, Amit. Yeah, like Amit said, we're Dune, we make crypto data accessible. Thanks everyone. Thanks for the Federal Bank of Philadelphia for having us. Okay. I think for some reason I think it disconnected me from the call. Over here, I just need to share again. Okay, sorry about that. Okay, here we go. Screen. Okay. Let me just move this out the way. Yeah, I'll click on that. All right, awesome. So we can now see my screen. So yeah, like Amit said, I'm Kareem. I do enterprise solutions at Dune, where I help our enterprise customers get the data that they need. Previously, I was doing consulting, digital asset consulting, mainly in strategy, helping the SEC, CFTC banks understand the crypto landscape. And so, yeah, and then switched over to Dune. So we're on a mission to make crypto data accessible. So what does that mean? You know, as traditional finance moves on chain and are looking to explore more use cases, you know, to track tokenized assets, you know, get data-driven ways to track, you know, competitive intelligence, market sizing, or just in general deploying capital into new rails. We kind of help give that on-chain data that they would need to integrate into their existing workflows. Being in this space for a long time, I've seen how critical, you know, and how important it is to get the data that you need. And so we help you get there. And so, you know, just to say what I'll be going over today is going to be 26 billion in tokenized assets. So that includes US Treasuries, non-US Treasuries, commodities. That's up to 26 billion for this month. And I'll showcase what data, you know, we'll be going over. And that number is accelerating. You know, the question isn't whether this matters, but more so of like why this matters to institutions and whether you have the tools to track this data. Now, before getting started, one thing I wanted to ask who's interested in general of tokenized assets. Raise of hands. Anyone interested in tokenized assets? Okay, good amount of people. And then who's also interested in analyzing tokenized assets? You know, I feel like that's important if you are interested in tokenized assets in general. So we'll be kind of going over that today. So here's the challenge. Like all of these tokenized assets are in public blockchains, Ethereum, Solana, Stellar, and others. The data is technically public, obviously, but it's raw, fragmented, and spread across dozens of different networks. And so, you know, like discussed in previous panels and reading the room, interoperability is a big, you know, it's a big area that, you know, people are interested in. And so the need for analyzing, you know, fragmented network is higher than ever. And so if you're a bank or a regulator, you know, interested in you know, evaluating exposure to tokenized treasuries, or just like a regulator trying to understand how much tokenized debt is outstanding and who holds it, you can't just go to Bloomberg or just, you know, like a terminal for that. You actually have to go to, you know, on-chain data to be able to get that. And so that being said, you know, most institutions today, they either build expensive custom pipelines, rely on static reports that are, you know, outdated at the moment they're published, or they simply don't have visibility at all. And that's the gap that we kind of fill. So Dune, we index blockchain data across 100 plus blockchains. You know, in real time, we make it queryable through SQL. So we basically create custom logic that you or, you know, together we can work with and basically build out workflows that are scheduled, you know, real time, and the data is flowing in simply enough. And now with AI, you can connect Dune to your existing AI workflows through an MCP or a CLI, and then you would be able to use natural language to analyze on-chain data. Oops, sorry. There we go. But what makes us different is like, especially for the audience, is that everything that we do, we try to, you know, showcase it through a verifiable manner. So there are, you know, regulator and compliance teams. They can see the underlying, you know, query, verify the methodology, and audit the data source itself. And, you know, that's a level of transparency that we aim for and we push towards. And so for enterprise users, we try to meet you where you are. So that includes whether that's API access, data exports into your own warehouse, downloading the data, curating the data to make it interoperable across different blockchains, or if you need dedicated solutions, we kind of meet you where you are. And, there's already issuers and compliance teams and research firms that already use us to monitor their tokenized products. And then I'm going to show you what that looks like. So here, this is a live demo. I'm going to see if I can switch directly to here. Yep, I can. Perfect. Okay, so as you can see right here, first I'll be going over a dashboard that shows tokenized US treasuries on chain. So we're covering basically the biggest RWA projects on chain. And I'm gonna just reload this real quick. Okay, there we go. And as you can see, we have just an overview of what we're tracking. We have a methodology, and then we have some technical caveats that you should consider when you're doing this analysis. So getting into the data itself, as you can see, this starting from 2024, you can see the RWA market has grown tremendously. And then you can see as the data has grown and as time has went over, the data itself and new tokens have been, coming out and published, or issued. And so that's what kind of gives us the edge in how you can analyze this data. And, this is also not enough. Teams need to actually dive deeper, whether it's a specific token or a specific tokenized asset. You need to dive deeper in what the data is telling you. So here are a couple more examples of if you wanted to, analyze Ondo's USDY, you can see what the volume levels are like across different blockchains. So this is all split up across the most notable blockchains that this token is deployed on, and, et cetera, et cetera. Some other teams, if they want to, see or analyze the market dominance of how rapidly an RWA grew over time, just so they can make a business decision or see their competitors, this is what they would use to leverage. And then, we can dive deeper into a granular manner for the data that you're looking for. And then, so this is an example of, tokenized US treasuries. We have another example of real world assets or non-US treasuries. And, we have the same case here where we go over the methodology, how we're, pulling the data. And just to show you this visualization, this might not be enough, but if you click into the data itself, you can see the actual logic and verify that yourself, which is, fairly important when you're making business decisions. And so each section has its own, summary. And then another use case is obviously tokenized commodities. This was talked about throughout the whole day. What does US treasuries look like? What does non-US treasuries? What does commodities look like? These are all use cases that are becoming prominent. And as you can see, the growth is expanding pretty consistently across each area. And last but not least, we'll go over credits as well. So same use case. There's obviously different methodologies for each one, but this is to show you that, being able to do this on your own requires a lot of, complexity, pipeline building, and analysis that you may not have time to do. So we kind of help you get there and get there quickly to be able to make whatever analysis this is. Obviously, RWA is just one example, but there's a plethora of other topics that we go over, which is prediction markets, DEX trading, whatever you're looking for. We kind of provide that across a subset of curated data sets that would help you tremendously. And as you can see, tokenized credit as well, the growth is pretty similar all across. So all these four dashboards, they add up to around 26 billion in growth, which is amazing, and we're seeing that growth just expand rapidly. So with that being said, I'll go back into slides. And it's okay, here we go. And yeah, so just to summarize, if it's on chain, it's going to be on Dune. We have over 100 plus blockchains. We have 600 protocols that we track. That includes vaults, lending, DEX trades, protocols like Uniswap, anything that you're looking for. We have that decoded and curated for you. And then, yeah, as you can see right here, our curated data sets. We have prediction markets, stable coins, labeling, pretty much an all-in-one platform that kind of gets you very much up to speed into analyzing unchained data for your business if you are trying to break into the space. On top of that, you can upload your data privately, and then you can create your own custom data sets if you do have an engineering team that you would like to leverage for doing so. And yeah, just to summarize, we went over around 40 tokenized assets across 20 different blockchains. All the data that we showed was sourced 100% from on-chain data. And here are the links. Happy to share with you guys afterwards. And yeah, feel free to connect. You can create your own accounts or whatever you want to do, and then you can come find me and we can talk how on-chain data will make your business better and breaking into the next step that you're looking for. So yeah, but that's it. I think I went a little bit quickly, but
Thanks.
We're reading time, so.
Yeah, thank you, Karim. Yeah. Okay. I think I'm fascinated by the new name of the company. I don't know if you know, blockchain data is like a vast desert, and we are looking for spice. Anyways, so we have a 20-minute break to, catch coffee.
50 ATs, we're gonna come back to 50.
Yeah.